So first of all, not in any particular order, actually, not in alphabetical order or seating order, let's turn to Jonathan Butcher. Jonathan, and we have some slides that we're going to tee up for Jonathan here. Are we good with that? I'll kill a few seconds here while we get ready with your slides. But of all the states, it seems like Florida and Arizona in particular have been laboratories for great ideas for improving education and serving kids, truly. The trend, or the hot new trend that we have been studying at the Institute is the ESA, which to me would be Education Savings Account, but I think in Arizona it is the Empowerment, yes.
Empowerment Scholarship Account.
Empowerment Scholarship Account. So looking at the plaintiff districts in the Abbeville case, do you think ESAs would work here? And how is an ESA different from a voucher, the V word? And how is an ESA different from a tax credit? And you're going to take us through a number of issues related to ESAs. Once again, a pleasure to have you. Look forward to hearing your remarks.
Thank you, Lauren. So I am the Education Director at the Goldwater Institute. It's great to be with you this morning. The Goldwater Institute is a think tank. And so oftentimes people wonder exactly what a think tank does or what people who work at a think tank do. So in my presentation, I'll explain some of the people that I've gotten to know and meet in Arizona who are using education savings accounts. And we'll talk a little bit about what education savings accounts are. Talk to you a little bit about Will Ferrell, a couple of slides in. And then we're going to talk about cane toads. They're poisonous, and we'll talk about why that's important. So first, here on the tire swing is Jordan Visser. And one of my great distinguished pleasures really as the education director at Goldwater is being able to meet the families who are taking part in this unique program that Arizona passed in 2011. So what do you do at a think tank? Well, at a think tank, especially in Arizona in May, when it's the last vestiges of any decent weather for at least another 4 months, I took time off at lunch and ran up to a public park and changed my clothes in the car and went out on the field because Jordan and a group of homeschool students were having a PE class that day at the park. And so we all got in lines, and you run over to the bucket and you grab the sponge out and squeeze it the whole bit and fill up a little cup and all those sorts of things. And Jordan, at the time, was doing it just like all the other boys his age that were 10 or 11. He was running down and doing the races and everything. Now the significant thing is that Jordan, just a couple of years before, had trouble walking. He has mild cerebral palsy and a variety of learning delays, and his mom, Kathy, who's back there, and her husband, Christo, had tried for many years to create opportunities for Jordan to succeed. They were afraid that he would never really be able to move on his own normally, like you and I walk down the street. And so when we were at this PE class, it was significant for Kathy to be able to stand on the side of the field and watch her little boy be normal. That's all she wanted, was for him to be normal, just like all the other boys running on this, in this PE class. The significant development that brought Jordan this opportunity, and if you could go to the next slide, please, and we're going to talk about the Howard family in just a minute, are education savings accounts. Many of you can reach in your pockets and pull out something like this, right? It's a credit card. We all know what they look like. But with an education savings account, the state deposits 90% of what they would have otherwise used for a child in the public school system so that parents can buy educational products and services for their children. So you can follow from A to Z what happens with every dollar that's being spent on a child for their experience in education. Last couple that I'd like to introduce you to before we move on. This is Amanda Howard and her son Nathan. Nathan didn't learn to speak when he was around 3 or 4 like most children. And it was around that time that Amanda and her husband Michael knew that there was something that they were going to need to do to intervene in Nathan's life. And so they put him in a developmental preschool program, and they worked to find a unique experience for him and some people to help him with his learning from day to day. And when he entered kindergarten, they realized that he was being overwhelmed by all of the other kids in the class. You get a room full of 30 kids and all of the noise and distractions. And Nathan is on the autism spectrum. And so they knew that they were going to need something unique, just like Jordan in the picture before. So both the Howard family and the Visser family were some of the first to apply for education savings accounts. In Nathan's case, they found a unique private school for Nathan, and they found some additional services outside the classroom in the form of a speech therapist, and they were able to pay for it using their education savings account. So one day, while Amanda was sitting on the couch with Nathan reading him a book, and they were turning the pages, Nathan pointed to a picture on the page and said, "What's that?" And now it was Amanda's turn to be speechless. And it's these life changes that education savings accounts are bringing to families around the country. If you go to the next slide, please. So the future of education is going to take a couple of specific forms, right? I think the first thing we're going to see is flexibility. Parents are going to need to have choices, not only of where their children attend school, but also what happens to them after school, outside of school, where they learn and how they learn, whether it's in a classroom, in a new school, whether it's an online class, whether it's with a tutor, whether it's with an educational therapist, whether it's at home buying a set of curriculum. Education savings accounts allow for all of these different varieties of learning experiences to happen for a child, all in the same experience. If you can move to the next slide, please. So there are 5 things that I'd like to talk about just quickly with the nuts and bolts of education savings accounts. So ESAs are available to students in 5 states today. Arizona enacted them in 2011. Florida enacted them in 2014. And just this year, Mississippi, Tennessee, and Nevada all enacted education savings accounts. The eligibility criteria for which students can participate are different from state to state. In most of the states, Arizona, Florida, Mississippi, and Tennessee, the students who are eligible to participate are children that have special needs. They're children that have an IEP, or children that need some sort of additional intervention in the classroom. Now, Nevada did something very unique this year, and lawmakers passed education savings accounts that are available to every public school child in the state of Nevada. With the applications, a child will leave the traditional public school system, fill out an application, and their parents will sign a contract with the state. And money will be deposited from the state general fund into this restricted use bank account that parents can then use to buy these educational products that we've been discussing. The award for all of these accounts in each state that has passed them is a percentage of what the state typically spends on a public school student. I start to glaze over when we begin to talk about school finance, so I'll just skip to the end part. And the end part is that it's about 90% of what is spent on a child in a traditional public school from the state part of the general fund is put into an education savings account. That means that every child using an education savings account is doing so at a discount from what the state is paying in the traditional public school system. The way that these cards can be used is the same way that you would use a debit card or a credit card. A parent will go to their private school and the card will be swiped in the card reader, or you can go to a bookstore or an educational therapist and you can either swipe the card or use PayPal to pay for the services online. Finally, every fiscal quarter, deposits are made into a family's education savings account. It doesn't come all at once. It's deposited throughout the year. And what that allows a state to do is to conduct an audit at the end of each fiscal quarter to determine if parents follow the law in all of their different expenses. So they can determine if there's a problem, and that way they can stop a family's account if there's an issue with an expense that was made, and that way they can resolve something before it becomes a widespread problem. Next slide, please. So I work for a think tank. The other thing, there's a chart. There's bound to be a chart in here. I actually have 2 of them. So that's what we do at think tanks too. The 2 things that we have done with families that are using education savings accounts in Arizona is we've conducted surveys about what they think about using these new accounts and how they think about it compared to their experience in traditional public schools. And as you can see from this slide, this was a focus group that we conducted with education savings account families in Arizona. Over 90% were very satisfied with their accounts. There's a smaller bar there that were somewhat satisfied, but all of them reported some level of satisfaction using an education savings account. If you can go to the next slide, please. And in this survey, this was the first survey of families using education savings accounts on a large scale in Arizona. And what we found was that all of the families reported some level of purple, which is satisfaction there at the bottom. Even the families that were highly satisfied in their previous public school, which is the bar above. So even the families that were very happy in their public school but decided it was right to leave for an education savings account reported some level of satisfaction with this new program. Next slide, please. So in Arizona, there are 2,400 children today using education savings accounts. In Florida, there are approximately the same number. There are about 2,500. The programs in Tennessee, Mississippi, and Nevada are all in the process of taking applications and making awards. The significance of the numbers in Arizona and Florida is that just a couple of years ago, there were only a couple hundred students in Arizona using these accounts. Every year, the number of children using education savings accounts has doubled. And so it shows a significant growth, and the satisfaction levels really bear that out. So let's talk about cane toads for a minute. In Australia, about 75 years ago, they had a problem with beetles eating the sugarcane in Australia. And so the lawmakers and the farmers got together and thought it would be a really good idea if they introduced cane toads to the island to eat the beetles. So they did so, they ate the beetles, but now they have a huge cane toad problem because the canes started reproducing, and now there's an entire website on the Australian government's webpage about what to do about the cane toad infestation. Oddly enough, there was an article that came out just a couple of months ago that said that the only humane way to kill cane toads is to catch them and then freeze them. Of course, cane toads are poisonous if you touch them, so you can see the problem. Catching cane toads. So what does that mean for us today? Well, with education savings accounts and any other public policy that a lawmaker is going to introduce, you're going to have fraud. It's a part of life. It's a part of public policy. It takes Google a fraction of a second when you type in healthcare fraud or Social Security fraud or you name the public policy, right? For them to bring up a recent article about someone that has tried to scam the system. So what it means for education savings accounts is that as they look to enact rules and remedies for problems, to change these accounts and to make it so that taxpayers are protected and students are protected and have the chance at a quality education, be very careful what rules and regulations are implemented, because you may wind up with a cane toad problem, right? Some lawmakers today may look at this problem and want to rush in and say, well, we need to limit what parents can choose from, or we need to restrict the amount of money that they have. But that would then eliminate the flexibility and just the great opportunities and innovations that have come from these education savings accounts. So today, the Goldwater Institute has a wealth of resources on our website talking about how to deliver the right kind of rules and regulations to make sure that families have the chance at a great education for their child, so that vendors who are providing these cards can come up with innovative ways of delivering education, and so that we don't stifle this very exciting program that is now helping thousands of children around the country.
Excellent. Let's go, Jonathan.